Forex Focus brought to you by IG. Taking a look at crude oil correlations today to Forex markets, and on the face of it, this might feel like a weird setup or a non-story, so to speak. What does crude oil, a primary commodity, have to do with euro, pound, dollar, yen, and everything else? Well, we're going to see some really interesting correlations here, and some correlations that end up making sense. First of all, why the heck are we looking at crude oil? Well, crude has resurfaced as a very relevant market. And how do I measure relevance in market? It's usually price action. This is a market that's been ripping higher, one that we thought, after all of the Russian-Ukrainian stuff of 2022, we saw these crazy highs in crude oil above triple digits, all the way up to above $120 a barrel. And after that, we came down. A lot of that fear dissipated here in 2023. For the first 6 months of the year, some very, historically healthy, normal price action in crude. $70 a barrel, $75 a barrel, $80 a barrel, back down to 75. Oh, they're going to challenge that 70 level. They traded in the 60s for a handful of sessions. Didn't see this coming. A rip higher here from those high 60s all the way north of $90 a barrel. Not only north of $90 a barrel, but feeling pretty comfortable. We've traded the last couple of trading sessions above that level and got above 93. So scarily close to triple digits once again. And so there you have the story in crude. Now, what does it mean for Forex markets? Well, when it comes to US dollar versus crude, you have a slight inverse. Now, just as an aside, this is one of the great things about Forex markets. They're historically very uncorrelated to almost every other asset class. You'd be hard pressed to find a historical trend that says, stocks do this, and so euro does that, or pound does that, or yen does that. Even when you do find those correlations, they tend to go back and forth around zero, but you'll have some periods, of course, of high and low correlations. But historically, much less correlated than, say, looking at, Apple stock versus Coca-Cola stock. And you might think, oh, they're different sectors, they're different companies. Yeah, but if the stock market's doing poorly, they're both usually moving in the same direction. If the stock market's doing well, they're probably moving in the same direction. So just as an aside, Forex usually has some of the lowest correlations to other asset classes, crude oil, gold, and what have you. But there is this slight inverse correlation or negative correlation between dollar and crude. Theoretically, a soft dollar can cause crude oil price appreciation. You see more red in front of you than green. Now, that red hasn't really gotten lower than around negative 0.5 or 0.6 over the course of the last decade here. But it is more red than green, more negative than positive. And this makes sense because, we trade crude oil in the US. When we look at WTI crude oil futures, that's priced in US dollars. And so theoretically, all else equal, if nothing's going on in crude, nothing's going on in energy, you're not seeing any prevailing sentiment or supply outweighing demand or demand outweighing supply, a dollar market being higher and crude oil being priced in dollars would theoretically cause that crude oil that's priced in dollars to move lower, right? The denominator has gotten larger, so the totality of this price moves a little bit lower, theoretically. And again, all else equal. And you'd be hard pressed to find a day where nothing is going on in crude oil. And then vice versa, right? Like a US dollar moving lower can mean some price appreciation in that crude. Now, we can draw some stronger correlations, though, especially when looking at Canadian dollar here. And you look at this historical chart, and I was actually really surprised by how well these two lined up on top of each other. Of course, I knew putting together today's show that there was going to be a positive correlation historically between Canadian dollar and crude oil. And that has a lot to do with Canada's economy. A good portion of it is tied to crude oil production and refinement. And you can see it here, especially in that, 2000 to even recently here, range right on top of each other, crude oil and CAD. But then you get to the pandemic till now and a little bit of breakdown. And that might make sense if you think about it a little bit harder, because what has been happening recently amid the inflationary fears and everything that's gone on the last several months, we've had an up crude oil market, but also an up US dollar market. And so not what we've been seeing normal between CAD against US dollar and crude oil against US dollar. US dollar has been moving higher, sending Canadian dollar a little bit lower. Crude oil has been moving higher, which usually brings that Canadian dollar higher. But Canadian dollar has been kind of stuck in the middle. It doesn't know whether to rally because crude oil is rallying, or fall because the US dollar is rallying. So you've got the historical positive correlation. And you have Canadian dollar being one of the only major currencies not down on the year against USD. You see USD CAD down about a percentage point on the year, meaning Canadian dollars up a percentage point against USD on the year. And that might not seem like anything. Frank, you led the show with the fact that crude oil is back above $90. Well, look at any other major currency against USD this year. Especially take a look at yen, take a look at Australian dollar, which Canadian dollar gets lumped in with so often, and pretty much unchanged on the year against US dollar in 2023 is a pretty good year for a major currency. And so again, to that point of crude oil kind of keeping Canadian dollar afloat, when if that correlation didn't exist, you would almost expect this USD CAD chart to be near its highs of 137, 138, what have you, maybe even getting to the highs that we saw last year. And you now have here this crude oil chart laid on top. And of course, you see that it's been a better year for crude there in the black line than it has been for Canadian dollar. And this makes me wonder, as a forex trader, if I have Canadian dollar positions on, or I'm thinking about trading Canadian dollar, might have to factor crude oil's future into my stance here, because it'll be really interesting to see what happens if crude falls. Then you might see this Canadian dollar market sink to the lows that these other major currencies have seen. Because again, the correlation to crude oil has been one of the major proponents holding up that Canadian dollar market. And on the flip side, if crude oil does continue to press new highs and maybe some of the dollar bid dissipates, then maybe this Canadian dollar really flies. It's almost like, wanting to run with crude oil. It's got a parachute to its back because of the US dollar bid that we've seen over the course of the last couple of weeks. And maybe that gets removed if US dollar does come off of its highs that we've seen against yen and euro and everything else. So it'll be really interesting to see if crude can take hold of this Canadian dollar, or if crude comes back to $60, $70 a barrel, then this CAD market might go the way of euro, yen, and Aussie that we've seen over the course of the last couple of weeks.